Good evening, students. Let's discuss part 2 of cost accountancy. The question number 4. Hotel Irevana Inn has a capacity of 200 single rooms, 40 double rooms. The average occupancy both single and double rooms is expected to 80% throughout 365 days. The rent for double room has been fixed as 125% of the rent of single room. The cost as under variable cost and fixed cost are given for both single room and double room. So 150, 110, 175, 60 and 125 respectively. Calculate the rent chargeable for each single room and double room. So you are requested to find out the rent chargeable, the cost of rent, how much rent to be charged to the room occupier per day in such a way that the hotel of margin of safety of 20% on rent of rooms. Margin of safety means 20%, that is profit margin, total cost out of which we have to put 20% on, for profit. So let's prepare here. So single room, number of single room 40, number of single room actually 40. So number of days in a year 365 days into occupancy rate 80%. So the room days in a year for single room, that is 40 into 365 into 80%, that is 58,000. 11,000. 40 into 365 into 80%, that is 11,680. So it is for double room, it's for double room. So the double room is, the number of double room is 40, number of single room 200 rooms into 365 days, the same occupancy rate. So 200 into 365 into 8%, that is 58,400 room days. So these are room days per day. And then computation of the total cost. So what is the total cost? We have to find out. The computation of total cost is single room. So single room, how much the variable cost? Actually, the variable cost for single room 110 rupees each per day. So total number of single room 58,400 into 110. So single room 58,400 into 110, that is 6 lakhs for 64 lakhs 24,000. And then double room 11,680 rooms, and then 175 rupees variable cost. So 11,680 into 175, that is 20 lakhs 44,000. This is total variable cost. If you add, that is 64 lakhs 24,000 plus 20 lakhs 44,000, that is 84 lakhs 68,000. It is a total variable cost. And then fixed cost. What is fixed cost? This is variable cost and then fixed cost. So for single room, how many rooms? 58,400 rooms into 60 per day. So 60 per day. So 58,400 into 60, that is 35 lakhs 4,000. And then double room 11,680 into total fixed cost 125. So 11,680 plus into 125, that is 14,60,000. 14,60,000. So if we add 14,60,000, 35 lakhs, 4,000, so the total is 49,64,000. So total fixed cost 49,64,000. Total variable cost 84,68,000. So the total cost we must add both two. So the total cost is 49,64,000 plus 84,68,000 equal to 1,34,32,000. So this is the total cost per year, both single room and double room. Total revenue, what is stated in the question, that is margin of safety is 20%. Then that is break even point, that is 80%. So in order to find out the total revenue, the total cost must be divided by 80%. For 80%, if it is total cost 1,34,32,000, then what should be for 100? That is the revenue. So 1,34,32,000 divided by 80%, that is 1,67,90,000 rupees. 1,67,90,000. This is a total revenue. Total revenue. So let's prepare the notional single rooms. Notional single room means for double room it is charged 125% of what is charged for single room. That is 125%. That means 1.25 times of single room. So single room, for example, total single rooms, that is 58,100. If it is 1, then the notional is 58,400. Double room 11,680, it must be multiplied by 1.25. It is as equal as to single room. How many single rooms? So 11,680 into 1.25, that is 14,600. So 14,600 single room equal to 11,680 double room. So the total single room 14,600 plus 48,200, 400, that is 73,000. So these are total notional single room. Notional single rooms. So what is the total cost? 1,67,000. 16 lakhs. What shall I say? How much we find out the total revenue? 1,67,90,000. 10, please add it. So rent per day for single room. So 1,67,90,000 divided by 73,000 single rooms. Notional single rooms. So what will be the single room rent? 70 divided by 73,000. So 230 rupees single room. 200 rupees, 230. This is a single room. Rupees 230 single room. So then it is for double room. For double room actually rupees 230 into how many times? 125 times. You can multiply by 125 or 1.25. So single room into 1.25, 200 87.50 rupees. So the answer is over, and then we will see next question. Here the question number 4B, Omega Limited undertook a contract for construction of the building. A contract price is 45 lakhs. During the first year, the following amounts were spent, and then out of which a sum of rupees 16 lakhs 85,500 representing 90% of work certified was received. So from this we will find out the amount of work certified. Out of work certified, 90% is received cash. So this is cash received. So 16 lakhs 87,500. So divided by 90%. Then it is work certified. So 16 lakhs 87,500 divided by 90%. That is work certified is how much? 18 lakhs 75,000. Just we will note it down now itself. And then during the year, first year, the materials used 7,87,500, wages paid to workers 4,50,000, overhead expenses 1,12,500. During the second year, the contractor spent the following expenses: materials used 11,25,000, wages paid to the workers 9 lakhs, overhead expenses 2,25,000. In the second year, the contract was completed, and the sum of rupees, during the next year, the sum of rupees 26,25,000 was received by the contractor. Now we have to prepare contract account and contractee account for both the years. First year, second year, both the years we have to prepare contract account. Let's prepare the contract account. It is also easy question one. The contract account in the first year end. Let's prepare the contract account. So during the first year end or first year, the contract account So the materials is 7,87,500. So two material 7,87,500, and then two wages 4,50,000, and then overhead expenses, that is 1,12,500. So by work in progress, just now we find out how much work in progress, that is 18,75,000, because out of that 90% cash received. If 90% cash received, that amount 16 lakh something, how much? 16 lakhs 87,000, that represent 90%. What should be the 100%? That is a work in progress. So work in process 90%, then so 16 lakhs 87,500 divided by 90%. So the value was 18 lakhs 75,000 work in process. So if we balance, we will find out the notional profit during the first year. So 18 lakhs 75,000 minus 18 lakhs 75,000 minus 7,87,500 minus 4,50,000 minus 1,12,500. So 5,25,000 rupees is notional profit. So if it is notional profit, out of that certain percentage, first of all we will see how much of percentage of the completion of contract finished. Total contract price is 45 lakhs. That is, contract price is 45 lakhs. Out of that, work in process is 18 lakhs 75,000. So 18 lakhs 75,000 divided by the contract price 45 lakhs into 100. So nearly 41.66 percentage is completed. If it is 20, between 25 to 40%, then one third of the notional profit must be charged to the profit and loss account. So one third to P&L account, we have to charge one third of notional profits. So 52 lakhs, 5,25,000 into one third. How much cash received? Only 90%. So this amount is to be charged to the P&L account. So how much? 5,25,000 into 90% divided by one third. So that amount is 1,57,500. 1,57,500. So here by notional profit, we have to transfer that to the credit side, that is 5,25,000. So the total balance would be kept as a work in progress reserve. So 5,25,000 minus 1,57,500. So it is the work in process reserve, WIP reserve. How much? 3,67,000. It will be considered as a opening balance of the next year. So please make note of it. 3,67,000. So in the first year, the contractee account, how much received? Bank account debit to contractee account, that is during the first year we received by bank account debit to contractee 16,87,500. So this will be the closing balance. So you close it 16,87,500, 16,87,500. So to balance, carry down, that is 16,87,500. And then next year we shall prepare contract account. So the contract account for next year, to work in progress. How much work in progress during the first year? 18,75,000, out of which it is transferred to the reserve, that is, if I have to deduct, that is 6,67,500. So this is the opening balance. So if we deduct 18,75,000 minus 3,67,500, that is 15,07,500, 15,07,500. And then two materials during the next year. How much materials? That is 11,25,000. And then wages paid, two wages, 9 lakhs. And then next overheads, two overheads, that is 2,25,000. So the contract was completed at the end of the second year. So the contract, how much total contract price? 45 lakhs. So contractee account debit to contract by contractee. So the contract price is 45 lakhs. So if we balance, we will find out the profit. So 45 lakhs minus 15,07,500 minus 11,25,000 minus 9 lakhs minus 2,25,000, that is 7,42,000, 7,42,500. It is a profit. Profit on contract, P&L account. This is a profit. Make note of it. So 45 lakhs. 45 lakhs. And then contractee account at the end of the second year, contractee account, how much cash received during the next year? Opening balance by balance brought down. What actually 16,87,500. So 16,87,500. During the year we received another amount. How much? Here question. 26 lakhs 25,000, 26 lakhs 25,000. So contractee account debit, contractee account debit to contract. What is the contract price? 45 lakhs. So if we balance, what will be the balance? We have to yet to receive. So 45 lakhs minus 45 lakhs minus 16 lakhs 87,500 minus 26 lakhs 25,000. So 1 lakh 87,500. 1 lakh 87,500. So by balance carry down 1 lakh. This is 1 lakh 87,000. So this sum is over. We will see next one. Question number 5. Super Bite is a leading product in the confectionery which is obtained after it has gone through the 3 direct process X, Y, Z. There are 3 processes, the production process. The following information obtained from the records of Super India Limited. The input of raw materials, every process, all particulars, input, other raw material, direct wages, normal loss, output, sale of scrap, etc. for all process X, Y, Z are given. So, the total overheads, please make note of this is important point. The total overheads 90,000 which are recovered at 100%. So, for all process, whatever the direct wages, that will be the overheads. So, make note of it. So, everything is given. Let's prepare the different process account for the firm of July 2024. So, we will prepare the process account. Question number 5A. Question number 5A. Process X. Process X account. Process X account, we have to so this is for units, this is amount, units, amount. So input, what is the input in the process X? Input, you see 30 rupees per unit. Total units introduced in process X is 1000. So input is 1000 units into 30 rupees. So the cost of the raw materials, that is 1000 units, the cost is 30,000. And then other materials, how much? That is 26,000. And then direct wages, how much? That is 20,000. And then overheads, we have already seen overheads, that is 100% of direct wages. 100% of direct wages, how much? That is 20,000. The same 20,000 will be the other overheads. Normal loss 5%. So by normal loss 5%, 5% of 1000. So 1000 into 5%, that is 50. So how much finished product? Output by process 2. It is to be transferred to process. Output transferred to process Y. How much? 950. It is given in the question. If we balance, then actually it is correct. Out of 1000, 50 is a normal loss, and then process 950. It's correct. So the normal loss actually, sale of scrap per unit is 20. So 50 units into 20 rupees, we realize that amount, that is 1000 rupees. Now we find out what is the cost of process Y. So first we balance number of units 1000, so it is tallied 1000, 15 plus 950 1000. So what is the cost of the process Y? The total cost, please find out how much. 90, this also 30,000 plus 26,000 plus 20,000 plus 20,000, so 96,000. So just you have to balance it, 96,000. If we balance, that is 95,000. So the process Y, the finished goods transferred to process Y, 950 units, that cost is 95,000. Let's prepare the process Y account. So the process Y account, process Y account. So from process X it is transfer, so to process X, how much transfer? 950 units. So the cost is 95,000, because this output is to be treated as an input of process Y. So other materials, that is how much? 19,800. So 19,800. Direct wages 30,000, and then other overheads, that is 100% of direct wages, that is also 30,000. So here normal loss, how much? The percentage is 10%. So 10% of 950, so 95 is a normal loss. So process transferred, process by process Z, how much it is transferred? That is 840. So 840. So if we balance 950 minus 950, 950 minus 95 minus 840, so there is a abnormal loss of 15. So by abnormal loss, that is 15 units. So we find out now the normal loss. Actually normal loss 10%, 95 units. So we realized a certain amount, that is 40 rupees. So 95 into 40 rupees, 95 into 40 rupees, so 3,800. And then process 2, how much process 2? Actually we have to add these cost. How much? 95,000 plus 19,800 plus 30,000 plus 30,000, so 1,74,800 total cost. Out of that, for normal loss 3,800 realized, so we have to deduct that amount. Total input is 950. Out of that, 95 is the normal loss. So for this much of units, so this much of cost, then how much it should be for 840? So this is a cost of process Y, that is process Y, the cost of finished products. So how much we? 1,74,800 minus 3,800, that is 1,71,000. 1,71,000 divided by 950 minus 95, that is 855 into 840. So how much? 1,71,000 divided by 855 into 840. So 1,68,000 it is a finished products cost, 1,68,000. So we have to mention 1,68,000. For abnormal loss also we apply the same formula. So 1,71,000 divided by 855 into abnormal loss, that is for 15 units. So 15 units how much? 1,71,000 divided by 855 into 15, that is 3,000 rupees, 3,000. So abnormal loss is 3,000. So 3,000. So if we add, it must be tallied. So how much? Actually this is 1,74,800. We had already calculated. Now 3,800 plus 1,68,000 plus 3,000, that is 1,74,800. 1,74,800. So for process Z we will prepare. Let's prepare process Z. Process Z also. Process Z actually just a minute. Process Z. So from process Y to process Y, that is 840 units transferred. The value is how much? 840, this amount. Actually 840, 1,68,000. So other materials as per the question, that is 29,620, 29,620, and then direct wages how much? That is 40,000. So others overheads the same 100% of direct wages, that is 40,000. So how much actually by normal loss, that is how much percentage? That is 15% of 840. 15% of 840. So how much it should be? 840 into 15%, that is 126. So the realizable value is 50. So 126 into 50 rupees, that the amount we collected, so 6,300. And then finished stock how much? Finished stock how much? The question itself, that is 750. So if we balance, we will find out whether abnormal loss or abnormal gain. So which side is greater? This side is greater. So 126 plus 750, that is 876. Input is only 840, but output is 876. So there is an abnormal gain. So 876 minus 840, that is 36 units abnormal gain. So we have to find out the abnormal gain value and then finished goods value. So here how much we will find out? We total 4 amount, the cost, the process Y, material cost and other material, direct etc. Out of that we have to deduct 6,300. So how much this amount? 1,68,000 plus 29,620 plus 40,000 plus 40,000 minus 6,300. This is amount. So divided by how much units? 840 units. Normal loss 126 units. So what is the total? So 1,68,000 plus 29,620 plus 40,000 plus 40,000 minus 6,300. So 2,71,320 divided by 840 minus 126, that is 840 minus 126, that is 714 into what is the finished product, that is 750. So we will easily find out the cost of finished stock. So 2,71,320 divided by 750 into 750, that is 2,85,000. So 2,85,000, this is the value, 2,85,000. 2 lakh. So what is abnormal gain? So 2,71,320 divided by 714 into abnormal gain of 36 units. So 2,71,320 divided by 714 into 36. So 13,680. So 13,080. So if we total, it must be tallied. So 1,68,000 plus 29,620, 40,000, 40,000, 13,680. So the total is 2,91,300. Here also 6,300 plus 2,85,000, 2,91,300. So 2,91,300. So it is tallied. The question is over. Let's see another question, 5b. So 5b we will see. "5b, a super bite, a leading product in the confectionery markets which is obtained after it has gone through 3 different distinct processes X, Y, Z. The following information is obtained from cost records of Super India Limited for the month of July 2024. The particulars, the input of the raw materials, process, actually this sum we finished, and then anchored. Sorry. Next question is, Ankriti Limited manufactured the product X and Y. During the year ending 31st March, it is expected to sell 7,500 kg of product X, 37,500 kg of Y at the rate 60-32 respectively. So, selling price is given 60 rupees, 32 rupees. The total number of products sold, that is 7,500 kg of X and then 37,500 kg of Y. The direct material of X, Y, Z are mixed in the proportion of. So in order to manufacture the product X, 3 materials are required, that is A, B, C. For manufacture of X product, the A, B, C are required in the ratio of 4:4:2. Whereas in order to manufacture the product Y, material A, B, C are required in the ratio of 3:5:2. So the particulars of both the raw material, main raw materials and then finished products, opening stock is given, closing stock is given, anticipated cost per kg, that also given. Now what we have to find out? We have to find out the production budget, the material budget showing the purchase cost of the materials for the year ending 31st March 2025. So let's prepare first the production budget and then purchase budget. In production budget, how many units going to produce, we will find out. Out of that, what are the raw materials A, B, C are required in what proportions. So what is the purchase rate, how much we have to purchase, like that we will see. So question number 5b, we will prepare production budget. Production budget for the year ended 31st March 2025. So product X, product Y. Actually what is given in the question, please see once again. So production 7,500 kg of the product, and then 37,500 kg of the product that is going to be sold. So sales is the number of units to be sold 7,500 x number of units sold for product Y, that is 37,500. And then here the X product and Y product, the opening stock and closing stocks is given. In order to find out the production, closing stock must be added. So add closing stock, if any there is closing stock. So how much closing stock? That is closing stock, this is a closing stock 2,000 and then 3,500. So 2,000 closing stock for X, Y 3,500. So if we add 7,500 plus 2,000, 9,500, and then here 37,500, 3,500, that is 41,000. So less opening stock. So sales plus closing stock minus opening stock, that is production. So 1,500, here 3,000 opening stock. So if we deduct the production, how much productions? So this is a production budget. So the production is 8,000 units for X we have to produce, and then here for Y we have to produce 38,000 units we have to produce. This is a production budget for X and Y, the main product. Actually, for which we are in need of three materials A, B, C. So how much of ABC required for producing product X and Y, and then what is the closing stock and then opening stock, how much we have to purchase. So what is the purchase price? So we will calculate the product, purchase budget. So purchase budget, purchase budget budget total A, B, C particulars. So A, B, C and then total. So materials required for X product, ABC in the ratio 4:4:2. How much material we are going to produce? A material, the production process X product, how much we produce? That is 8,000 units we have to produce, for which the raw materials required A, B, C, how much? 4:4:2. That means 8,000 divided by 10 into 4. So this is 3,200. So A material required 3,200. B material also required 3,200. This is 1,600. And then material required for product Y, ABC in the ratio, that is 3:5:2. How much required? How much production we are going for Y, that is 38,000. So 38,000 we have to produce Y product, for which A material, B material, C material are in the ratio 3:5:2 we required. So 38,000 divided by 10 into 3, that is 11,400. So 11,400, and then here if it is 11,400 divided by 3 into 5, that is 19,000 divided by 5 into 2, that is 7,600. So this is total requirements. How much? 3,200 plus 11,400, that is 14,600, that is 0, 0, 22,200, that is 9,200. This is the total requirements. Out of that, add closing stock. Closing stock how much? Closing stock, how much it is given? That is ABC, that is 3,000, 2,400, 5,800 and then 17,300. So closing stock 2,400 and then 5,800 and then 17,300. So if you add, so 14,600 plus 2,400, that is 17,000, 22,000 plus 5,800, that is 28,000, 9,200 plus 173, that is 26,500, 26,500. So less opening stock. Opening stock how much? That is these three things: 3,000, 2,500, 16,000. So 3,000, 2,500 and then 16,000. So this is the purchases. So this much of quantity we have to purchase of both A, B, C. So how much purchases? That is 14,000 units, and then here 28,000 minus 2,500, 25,500. Here 16,500 minus 16,000, that is 10,500. So what is the purchase cost? Purchase price, that is for 10 rupees A, B 8 rupees, C 6 rupees. So the rate, purchase budget is 14,000 into 10, that is 1,40,000, 25,500 into 8 rupees, that is 2,04,000, and then 10,500 into 6, that is 63,000. So this is a total purchase. So in order to manufacture, I mean 8,000 units of X and then 38,000 units of Y, we need, I mean the purchases, how much requirements is 14,600 requirements of A and then 22,200 requirements of B and then 9,200 requirements of C. The cost is 1,40,000. We have to spend, we have to purchase A material and then B material and then C material. So it is a purchase budget. Let's see the another question. So question number 6. The standard materials of inputs. Standard materials input required 1000 kg of the finished products are given below. PQR, the quantity. So quantity P 450. The standard price is, actually this is standard rate. Standard rates are given. These are standard rate. For PQR standard rate is 20 rupees, 40 rupees, 60. The quantity required 450, 400, 250. Total requirements 1,200. In order to manufacture 1000 units, we have to input the raw material 1100 units, sustaining the loss, standard loss of 100. The actual production in a period was 20,000 kg. The finished product for which the actual quantities of the materials used, that means this is actual quantity, this is actual rate. So from this we will find out the actual cost of the materials. Here the standard price and then actual quantity. So what are the things required? actually material cost variances. Material cost variances means standard cost minus actual cost, standard cost minus actual cost. And then here material price variances means actual quantity into standard price minus actual price. Material usage variances, you know, material usage variance means standard price into standard quantity minus actual quantity. Likewise, material mix variances, revised standard quantity we have to find out. After that we will find out both material mix variances. We will see one by one. Here first we will calculate what are the things required. We will calculate. So question number 6a, we will put it the heading, that is M1, M2, M3 like that, because the actual cost, actual cost, in order to find out actual cost, actual quantity into actual price or rate. This formula we require first. So the product, P product, I mean PQR. So material P, Q, R, three materials, actual cost, actual quantity how much, and then actual price, I mean actual rate. What is actual in this question? That is 10,000 P quantity, and then this one. So 8,500 and then 4,500. So actual quantity of P 10,000, actual quantity of Q 8,500, and then actual quantity of R 4,800. The rate, actual rate is 19 rupees, and then 42 rupees, and then 65 rupees. So we can easily find out AQ into AR, we will find out. So what is, so 10,000 into 19, so 1,90,000. 8,500 into 42, that is 35,700. And then for 4,500 into 65, so 2,92,500. So this is actual cost for all the material PQR. So 1,90,000 plus 35,700 plus 2,92,500, that is 1,90,000 plus 8,500 into 42, that is 3,57,000. Please make note of it, not 35,700. So 1,90,000 plus 3,57,000 plus 2,92,500. So 8,39,500. This is AQAR. Make note of it. And then we will prepare standard cost of materials. I mean standard cost of material used. Here that means actual quantity into standard rate we will prepare. So here the same product PQR, actual quantity how much? This is the same 10,000. This one 8,500 and then 4,500. Actual rate 20 rupees. This amount 20 rupees, 40 rupees, 60 rupees. So this one, actually this is standard rate with actual quantity. Standard rate means 20 rupees, 40 rupees and then 60 rupees. So 10,000 into 20, 20,000, I mean 2 lakhs. 8,500 into 40, 8,500 into 40, that is 3,40,000. And then 4,500 into 60, that is 2,70,000. So this amount is 2,70,000 plus 3,40,000 plus 2 lakh, that is 8,10,000. That is called AQSR, this amount. And then revised standard quantity, we will find out RSQ into SR. We have to find out. So actual quantity, how much? Actually actual quantity here, that is actual quantity is 10,000 plus 8,000, 10,000 of P, 8,500 of Q plus 4,500 of R. So if you add 10,000 plus 8,500 plus 4,500, that is 23,000. So actual quantity 23,000. So for P, Q, R, we have to find out for 23,000 what is the quantity actually. So here RSQ, revised standard quantity, into SR. How to find out RSQ? For 1100 units, please look at this. I mean for 1100, that is a total standard quantity of all materials. Total standard quantity of all materials means 1100. So 1100 for which the standard quantity of material P, that is 450. So actual quantity of all materials, that is 23,000. So this is revised standard quantity. So it will be in a fraction. You keep it like that. And then what is the standard rate? Standard rate is 20 rupees. So 450 divided by 1100 into 23,000 into 20, that is 1,88,182. 1,81,182. For Q also we have to find out for 1100 total standard materials. So quantity Q of standard materials, that is for 400 into total actual quantity of all materials 23,000 into rate, that is 40 rupees. So how much? So 400 divided by 1100 into 23,000 into 40. So 3,34,545. 3,34,545. And then R also for 1100, the R standard quantity is 250 into total quantity of actual quantity, the actual rate is 60. So 250 divided by 1100 into 23,000 into 60 rupees, that is 3,13,636. So if we add, that is RSQ. So 1,81,182 plus 3,34,545 plus 3,13,636. So 8,36,000. So 1,82,000, 3,34,540, 3,30,640. So once again, please wait a minute. 1,81,182 plus 3,34,545 plus 3,13,636. So 23,060, 40. So how much? So 11,100. Sorry, here 1,88,000. There is a mistake. Okay. Here the balance is 1,88,182. 1,88,182 plus 3,34,545 plus 3,13,636. That is 8,36,363. This is RSQ into SR. And then next one is that is standard cost of output. standard cost of standard cost, that is for PQR. How much? For 1000 units, he see 1000 units, for 1000 units 450 into for 20,000, actually how much? 20,000 of actual production. For how much? 20,000 of actual production. So how much is quantity required? So standard quantity for manufacturing actual product of 20,000. So for 1000, if it is 440, I mean 450, for 20,000 how much? So 450 divided by 1000 into 20,000. So units 9,000 quantity, that is the standard quantity. So standard quantity in standard price. So 9,000 quantity, standard price as it is 20 rupees. Here also 400 divided by 1000 into 20,000 actual quantity. So how much quantity? 400 divided by 1000 divided into 20,000, that is 8,000 quantity. So 40 rupees. Here also 250 of, and then out of 1000 into 20,000. So the rate will be 5,000 quantity, rate 60. So if we calculate, multiply 9,000 into 20, that is 1,80,000. 8,000 into 40, that is 3,20,000. 5,000 into 6, that is 3 lakhs. So if we add, that is 8 lakhs. So this is SQ into SR. Clear? So material price variance. Material price variance. Actually, material price variance formula is actual quantity into SR minus AR. That is AQSR. In order to understand you, make you understand AQ and AR. So what is AQ and SR? AQ and SR, that is 8,10,000 rupees AQ and SR. AQ and SR, this amount, and down AQ into AR 8,39,500. So this amount like that, 8,10,000 minus 8,39,500. So 8,39,000, that is nearly 29,500 rupees adverse, minus. So adverse material price variances. And then material usage variances. Material usage variances means SR into standard quantity minus actual quantity. So that is SQ into SR minus AQ into SR. So SQ into SR how much? That is 8 lakhs minus AQ into SR, that is 8,10,000. So that is 10,000 rupees adverse. And then material cost variances. Material cost variances we know. Material cost variances, that is standard cost minus actual cost. That is SQSR minus AQAR. SQSR 8 lakhs. SQSR 8 lakhs. AQSR 8,39,500. So rupees 39,500 adverse. Next, material mix variances. Material mix variances RSQ into SR minus AQ into SR. RSQ into SR made 8,36,363 minus AQ into SR 8,10,000. So that is 26,363. That is favorable. Material yield variances. Yield variances. Material yield variances means SQ into SR minus RSQ into SR. So SQ into SR 8 lakhs minus RSQ the same amount 8,36,363. So it is an adverse amount. 8 lakh minus 8,36,363, that is minus 36,363 adverse. So this question is over, and then next question is question number 7. This is also the last, sum based question. Prepare the following information to show the management the marginal product cost contribution per unit. Marginal product cost means variable cost. We have to find out variable cost and then contribution per unit. The total contribution and profits resulting from each of the following: direct material AB, that is per 10 rupees per unit, 9 rupees per unit direct material for AB respectively, and then direct wages of AB, that is 3 rupees, 2 rupees respectively. Fixed expenses rupees 800, variable expenses are allotted to, that is 100%. What is direct wages? The same direct wages will be the variable expenses for these two. Sales price for A rupees 20 and sales price B 15. Sales mixer means, for example, different quantities of different products, that is one mixer. For example, product A 100 units, product B 200 units. If we sell, so that is a sales mixer. In another case, 150 units of product Y, product X, and then 150 units of product B, 200 units of product A and 100 units of product B. First of all, we will prepare, what is the total marginal product cost, we will find out, and then what is the contribution, we will find out. Out of that, in 3 cases, how it will affect, we will see one by one. So here the statement of marginal product cost, marginal product cost. So material A, there are 2 materials, material A and then material B. So selling price, it is given in the question paper. Selling price, how much? Selling price, that is 20 rupees for A and then 15 rupees for B. So variable cost, selling minus variable, it is a contribution. So contribution is required in the question. So selling, variable cost means direct material and then direct wages and then variable expenses. Variable expenses means 100% of direct wages. So for A product, direct material is 10 rupees, direct wages is 3 rupees. So variable cost also for 3 rupees. So the total variable cost of A is 16 rupees. For B, that is 9 rupees, direct wages, that is 2 rupees. So the variable cost also for 2 rupees, because 100% of direct wages 2 rupees, that is 13 rupees. So this is the this is the marginal product cost. This is required in the question, marginal product cost, that is variable cost, total variable cost. So selling price minus variable cost is equal to contribution. So that is contribution. Contribution means selling price minus variable cost. Selling price 20, variable cost 16. So 20 minus 16, that is 4 rupees. So contribution for A 4 rupees, Contribution B, 15 rupees minus 13 rupees, that is 2 rupees. Sales minus variable cost. So computation of profit under sales mix. So what is the computation of profit? In 3 cases, computation of profit under 3 mixture. First mixture A, B, that is total. How much? Number of units. 100 units. You see, 100 units. That's 100 units of product A and 200 units of product A. 100 units, 200 units. What is the contribution? Contribution is 4 rupees and then 2 rupees. So what is the total contribution? Total contribution we have to multiply 200 into 4, that is 400 rupees. This is also 400 rupees. 200 into 2. So the total contribution is 800 rupees. Total fixed cost, question itself it is given, that is 800 rupees. Actually profit means total cost minus fixed cost. Total cost minus fixed cost, that is profit. So here 800 minus 800, that is no profit. So in this case, first case, no profit. And then in second, the same A, B, and then total. AB total. So number of units is here 150. So number of units. And then contribution 4 rupees, 2 rupees. So total contribution, that is 600, here 300. So total contribution means that is 900 rupees. As usual, the total fixed cost, that is 800 rupees. So total cost minus total fixed cost, that is 100 rupees. That is a profit in the second case. So in third case, so how much units? 200 units A and 100 units B. Contribution 4 rupees, 2 rupees. So total contribution, that is 800 rupees, that is 200 rupees. So that is 1000 rupees total cost. So total fixed cost, that is 800. So the profit will be rupees 200. Total cost minus fixed cost, that is profit. So in the last case, the profit is 200. In the middle case, 100 rupees. And then in first case, no profit, no loss. No profit. So apart from that, actually from the question number say 7B and then 8A, B, C, all are theory based question. It is given in the MTP itself. If we go through, you will be in a position to understand. So I will finish this MTP now.